Welcome back, everyone. I hope we're all doing fine and well today. In this video, we're going to discuss the usual. We're going to talk about my very sluggish open positions. We're going to talk about my top trade setup. We're going to talk a little bit about fundamentals. And then I'm going to give you one or two about my trade recommendation. And that's all for today. So without further ado, guys, let's jump straight into it. So let's start with the economic surprise meter. All right. First of all, when you take a look at this, you will see that we still have United States dollar still very weak at 36%. We have the pounds at 50% neutral. We have euro at 67% strength. Okay, we have Japanese yen neutral at 50%. We have New Zealand 75% still very strong. Okay, we have CAD at 67%. We have Australian dollar quite weak as dollar. Okay, at 33%, and we have Swiss also pretty weak at 40%. On an average, the economy is at the G7, or let me say G8, based on all of this, because we have like 8 currencies right here, so I'm just going to call it G8. It doesn't matter. All right, the G8 currency, or on an average, they all kind of like range around 52%. Okay, which is still slightly strong. But when you now want to trade all of these pair individually, that is where things now get pretty dicey. Okay, that's where things get pretty dicey. However, I'm going to quickly talk about the US economic heat map. Let's take a look at what is happening in the United States, and then maybe we're going to talk about New Zealand because it seems very strong. We're going to talk about CAD, and then maybe United Kingdom. Then we jump into the Xfjpy top setup. So now taking a look at what we have right here on the United States economic heat map, you can see we still have the stock impact to be at 45.45%, which is relatively weak as well. All right, and that's more reason why. From Wednesday last week, we saw the Nasdaq, the Dow Jones, all of them kind of like torpedoed down a little bit. Although I'm still buying Dow Jones, which I'm going to share with you moving forward, but the market is awfully slow last week. I mean, some trade have been only there for the past 3 weeks, and they're just dancing around. They go up, they come down, they go up, they come down. It's more like in a range, and that is another reason why I didn't actually share any video last week, because it's just going to be a tautology or something like that. But this week, it seems like the market is kind of recuperating, and probably that we can see some momentum moving forward. That's why I figured let me just share one or two with you today. So taking a look at the US economic heat map, we have the quarterly GDP still pretty strong in a way compared to what was forecasted and what was released in May. I'm very sure we should be expecting something quarterly GDP this month. Okay, because let's take a look at the data we have coming next week. If the US quarterly GDP is among it, I think it should be United States dollar quarterly GDP. Where would that be? It is not among. Yeah, it should be. Like I said, it should be. So it's been forecasted to come, negative 0.2%, like unchanged. However, I would argue that we might end up getting a bigger number, all right, come next week, all right, on Thursday for the quarterly GDP. And if it happens to have or get anything higher than this, which is exactly what it's been forecasted anyway, if we get around 0%, maybe like a neutral growth, or we got something like 0.1%, that is going to be really helpful to the United States dollar. We're going to get a very spiky move on DXY, which is something that I personally do because I want to short the likes of pound dollar, maybe euro dollar, but I'm quite bullish on euro dollar right now. So I'm literally in the middle for now as far as dollar is concerned. I'm neutrally bullish on the United States dollar, and that would direct me into how I handle the rest of the major pair moving forward. And you can see the manufacturing and the service PMI, they are not looking good. The retail sales also came down drastically, all right, last week. And then we have the CPI year on year, the PPI year on year, the PCE. All of them looks to be slowing down, which is quite good for the economy, but it's not good for the currency. Then we have the wage growth. Okay, when you look at the wage, the NFP, the wage growth, the unemployment rate, the initial jobless claim, the just job opening, the ADP, the non-farm payroll, you see that all of them looks quite decent. Okay, they look quite decent. That's why when Fed was addressing the press on Wednesday last week, he said they have the labor market to bank on, whereas the inflation is slowing down in on its own without Fed actually touching interest rate. All they need is just to get a growth. Okay, and considering the fact that Trump is already making deals with his partners, Europe, UK, China. We would likely get a higher print on the quarterly GDP come next week. But that's why I'm still leaning quite bullish on DXY for now, like neutral bullish on DXY. So let's take a look at the United Kingdom economic heat map. So taking a look at the United Kingdom economic heat map, you see that we have a low print on GDP, the monthly GDP. which came out last week, a week before last, which is not very good because we saw GDP call just torpedoed down crazily, almost closing my pound yen trade. But I mean, my stop loss was able to catch it. All right, we have the service PMI, which look very good. It looks like the service PMI is booming in the United Kingdom. The manufacturing PMI seems to be boosting as well. It seems to be going up gradually as well from 4.5%, which was the forecast, and we got 46.4, which is quite good. All right, inflation rate, okay, is also going down gradually. The retail sales is slowing down, which is not good because I mean you want people to be able to buy stuff. You want them to be able to afford things. But it seems like people are not really buying things because we can see that the retail sales is going down. So that needs to be done some help. We have the CPI also what? The CPI seems to be slowing down, including the PPI, which is quite good for the currency, but not immediately good for the economy. All right. And then we have the unemployment rate at 4.6%. This is pretty high, but it's still moderate considering the employment change and the size of the economy that is run in the United Kingdom. So on an average for the currency, it looks like the neutral is fair enough, but for the stock, the impact is not good because the GDP is not looking good. The contrast, the CPI, the manufacturing PMI and service PMI is not looking very good either. All right, only the service PMI has crossed above the 50 threshold, but the manufacturing PMI is still very much lagging. All right, then the inflation, the retail sales, the PPI, they're not looking very good either, which is going to impact the what? The companies in the United Kingdom, because when people are not buying things and inflation is still going down, that is not good for for the economy. That nobody's buying stuff. The companies are not going to make profit. Okay, so that's not good. But the unemployment change also looks quite not very dicey. Okay, it's not looking very enticing either, especially when the employment change has to come down. Yeah, I think the fact that employment change came down is actually very decent because manufacturing PMI is down, the inflation is down, and then retail sales is awfully down as well. So this is this is very much expected. All right, moving. So the UK stock impact is not looking good, but the currency is very much decent. Let's take a look at the most strongest. Let me just say the strongest currency among the major currencies now, which is the NZD. NZD came the quarterly GDP in New Zealand came quite higher than what was forecasted, which is very good. The manufacturing PMI and the service PMI are still quite contrasting, and that is awfully bad, especially for the stock market. Okay, for stock market it is not very good, but for the currency also not pretty decent, but it is moderate considering what the retail sales looks like. Okay, there is a higher number, there is an higher print compared to what was forecasted for the retail sales. Inflation is also slowing down gradually, but it is within the target. It's above 2%, which is moderate for the size of the economy in New Zealand. And then the unemployment rate is also pretty high, right? 5.1%. But when you compare it with what was forecasted, which is 5.3%, I think 5.1 is quite decent, but still pretty high. Employment change is good because people seems to be getting employed in New Zealand. So on an average, it is good for the what? I mean, we got a very good reading for the currency because when you have a good unemployment rate, a good employment change, you have a steady inflation, you have a very a pretty bullish retail sales. Although the manufacturing and the service payment are not looking good, but the GDP looks very good. So those are very good points for the currency. But now when you look at the economy, the manufacturing and the service PMI is a no-no. And then when you look at the inflation seems to be going down. When inflation is going down, it's good for the currency, but it's terrible for the what? It's terrible for the economy. It's terrible for the stock market. And that's why we have both of them also look very terrible right there. And that's why we got a neutral on the stock market in New Zealand. All right. However, the rest looks very decent, especially when you jump over the manufacturing PMI and the service PMI in New Zealand. The rest looks very neat. Okay, and that's why I'm still pretty bullish on New Zealand. Lastly, let's take a look at the Japanese yen, which seems to be booming as well, considering the fact that Bank of Japan decided to leave the interest rate unchanged also last week. Now, look at the print right here. You can see that the service PMI seems to be booming. Also, the manufacturing PMI is also looking good. All right, all the way from 49, it jumped up by 0.4%. I mean, by 0.4, which is very good. The service PMI is the one that actually made the biggest jump. 4.5 is very good. The GDP growth, the quarterly GDP growth in Japan is also very good, 0.2% increment. That is not a bad print at all. The retail sales also got pretty high, even compared to the previous. All right, it got really high by 0.4. That's also a very good print right there. The CPI and PPI seems to be going very good as well. Now, the CPI and the PPI year on year, we're talking about inflation right now, they both seems to be going high. Okay, which is not very, which is, I mean, it seems to be going down slowly, okay, from 3.6, which was previous, to 3.5, and 4.1% previous to 3.2. I'm talking about the CPI and PPI right now. They all seems to be going down, and that is not good for the currency, don't forget. But when you look at the stock market, it is pretty good for the stock market. The household spending, or let's say another form of retail sales as well, okay, meaning how much people are spending in their household, you can see it's also falling down, meaning inflation that is slowing down is also affecting the household spending, okay, which is not good for the currency. But the stock market, it is good for it, because at least people can save more into the banks. People will request for much loan. People will request for more aid from their companies. So companies get to make more money, but it's just the retail sales and the currency valuation that will not be good, because people won't get to buy more stuff. And also CPI and PPI is also very low. So it's quite good for the economy, but it's not very good for the what? It's not very good for the currency. And when you take a look at the unemployment rate, it's pretty decent, 2.5%, neutral, flat, that's cool. But then when you take the last look at the employed person, meaning employment change, you can see that they had a whooping 40,000 people that lost their job, and that is not good for both currency and both economy, because they need to be booming on that front. So when you now look at it right here, we have a neutral print on the what? On the currency, 50%. Why? Because inflation is going down. Okay, we have household spending also. I think household spending is also bearish. Okay, going down, and then we had a slow print, or let's say lower number on the employed people in Japan, which is not very good as well. That's how we got 50%. But you look at the stock impact, everything looks very good. So when you take a look at the total economic growth in Japan, everything is pretty tight. I'm gonna tell you that it's very good, very decent, and pretty bullish. All right, economically. But the currency on the other side is still on an average, because you have to consider both sides when you want to trade, especially if you're a swing trader. So now, when we have all of this number, we have all of this understanding about the market. Now, you can now understand the reason why we got a very, very slow reading or slow momentum on pound yen, Kiwi yen right here, and then I think CAD yen as well. Okay, this is CAD yen right here. They are all moving very, very slow. Okay, it is awfully slow. I've opened this trade since last week, somewhere around this region, and it's been very slow since then. Okay, for like throughout last week, the trade was either in break even or in a very tiny store, in a very tiny profit, and that's where it is right now as well. So this is a much bigger number. I mean, a bigger the reason, or let me say, a bigger perspective on how to trade as a swing trader, okay? Because you get frustrated sometimes when you see profit that turn into a very small profit, or even run into a loss, okay? As a swing trader, these are things that you will see so many times, and you have to be able to accommodate it. You have to be willing to look over it and focus on the economic growth, focus on what the economy is actually saying, because that is the only thing that will make sense to you moving forward as a swing trader. So now, taking a closer look at the top trade setup on Xfinder right here. Let's go to the top trade setup. Let's go. Seems like my internet is a bit slow today. I think it has finally loaded up. So good. Right here we have Chfjpy still very bullish, which I love very well. Euro Aussie is reading very bullish. We're going to talk about the Euro Aussie. I don't really have any plan on Euro Aussie, but we're going to talk about that. Euro dollar, very bullish. Like I told you, I'm quite bullish to neutral on the dollar pair. I mean, on DXY generally. Although the currency is very weak, but the stock market is neutral, which puts me in a very comfy zone on the dollar per se. I mean, in general, but still, the trend is very bearish. Okay, DXY that you seen earlier, it is very bearish. So that is a little bit of a confusion right there that I don't like to meddle into, and you can see that's the reason why I can't just project myself and focus on the yen pair in general. All right, so we have silver right here, very bullish. We have gold right here, very bullish as well. We have Swiss yen bullish. We have Euro yen bullish. We have NZD-JPY bullish with score of 7, which is another pair that I'm buying. Nasdaq bullish with score of 6. We have I think that's all when it comes to the item that I trade. On the bearish side, Aussie CAD very bearish with a score of -10. Aussie Swiss bearish with a score of -8. Aussie Kiwi bearish with a score of -5. Aussie dollar pound Kiwi also bearish with score of -5 respectively. Although Aussie Kiwi, I kind of closed the trade because it's terrible considering the data that came out in Australia last week. The labor data that came out in Australia that was mixed. Okay, the employment change was bad, but the unemployment rate was good. Okay, so that was like a weak short effect. Went up, came down, and it kind of tapped me out on Aussie Kiwi, and I was just done with Aussie Kiwi in general. I was technically done, like done. So I just closed the trade and I moved to the next one. But we're gonna talk about it today. Maybe one of the trade I will recommend to you. I don't know, but let's see how it goes when we get to the chart. So without further ado, guys, let's switch to the chart real quickly. Now, taking a look at the US dollar index, which is DXY, you can see that the trajectory is still towards downside. I mean, it is very obvious, right? Although I am not, I've said this so many times, I'm not a bearish dollar kind of trader. I don't know why, but I just don't see dollar falling all the way down. I mean, I don't see dollar falling back to 90 right here. I mean, back to this region. I don't see it happening. It could, all right, but I don't see it happening. It's just the way it is, okay? The economy seems not to be looking too bad. I mean, if the economy is that bad, I'm very sure the Fed would have, considerably cut interest rates maybe by 0.1%. I mean, 0.25%, or maybe 0.5%, or maybe 1%. But leaning towards unchanged and keeping everything cool while the inflation slows down, it's a very positive print and a positive impact on the economy. It's just that the uncertainties that surrounds government spending, trade conflict, geopolitics, and every other thing that Trump has been doing, Trump administration has done so far, they entered the White House, has been quite chaotic for the dollar to kind of wrap its mind around it. And the market is not very sure about the dollar right now. That's why we're getting this negative momentum, or let me just say bearish momentum on DXY. So generally, I am not bearish. Overall, I'm not bullish either. That's why I am neutral and I'm just watching this. However, I'm still holding on to my buyers on it. If the market finds its way back to the bottom right here, potentially it could fall further. If it breaks above 100 region at the top here, potentially we could see it around 103 in the next coming of weeks, in the next couple of weeks, excuse me. So we just have to be cautious. We have to be patient to see how the dollar move in the next in a couple of days. Okay, so we just have to be cautious right now. But anything in here, I'm still very cautious, and I will watch closely. I'm not gonna jump into it. I won't force anything. I'm just gonna watch closely. But now, how do I handle pair like Euro USD? Because the momentum is very good. I would love to buy Euro USD, Euro dollar. I would personally love to buy Euro dollar. Or what do I talk about pound USD? Where is pound dollar? Do I have anything on pound dollar? Yes, I have something on pound dollar. What do you say about pound dollar? That has broken an intraday support. Okay, oh, excuse me, doesn't. But it kind of broke intraday support right here. Do I sell or do I buy from here? That is something that I can fully figure out if I have a bias on the DXY itself. But I don't. I really don't. That's why I've been leaning towards all the yen pairs. That's why I'm buying CAD yen. All right, I'm currently holding CAD yen since last week, Monday, literally. And it's still right here. You can see the level of nonsense that has happened to this particular pair. Okay, it is literally not going anywhere. So I'm still holding on to this anyways. I have Xauusd as well that I'm holding. Okay, this one is actually hovering around any kind of way. Okay, you can see it's been ranging. And I said it like 3 weeks ago, or maybe a week ago, that this particular region right here is going to pose a very strong challenge. And once it is successfully broken, I mean, we can aim higher on Kiwi. But right now, this region is it's posing to be a formidable challenge, or let's say opposer. And it seems to be winning right now. Because every time the market touched it, it couldn't break it. All right. This time it has touched it like twice right now, and every time it got bounced back to the downside. So if we get it retested the third time, maybe it's gonna get broken. I don't know, but I would love to see how it goes. But so far so good on Xauusd. I'm still holding on the trade. I will probably be adding to this trade if I get something like this. Okay, a clear and decent break to the upside, a pullback, and we have to the trade moving forward. Because on a general, on a more economic perspective, or on a more basic perspective, I'm still generally bullish on Xauusd, which is Kiwi. So that is that, by the way. Pound yen also kind of took me through the street of London. I mean, it was a roller coaster. Okay, it's been a roller coaster on pound yen. I've also been holding this since maybe May 29th or May 27th or thereabout. It's been forever. Then I added to the trade around this region, and you can see what's been happening. It's more like a weak shot when the market is making something like this, like multiple highs and multiple lows, just kind of like a range bound. It is awful, especially for swing trader. When you got some profit, then you see it all the way down back to loss. You see it back in profit, back to loss, back to profit. It is a crazy move. I don't like it, but there's nothing I could do. So we still also have this particular region right here, around that 156 region, that is posing as a very strong challenger, and we're going to see how that goes. However, if we get a break above these highs right here, decent break, a nice and decent pullback, I might head onto the trade and see if we can get the cut of 199 right there. Aussie card is the one I'm selling. This one also is not without his own challenge as well. Okay, I took the trade somewhere around here, sometime like 15th of this month of June, and since then it went back up. Last week when that labor data came for the Australian dollar, we saw that very spiky move to the upside right here, and later we got the market start coming down. Now it looks to be very good. Seems like it might actually come all the way down to this region, or even further, excuse me, or even further to the downside. But right now, I'm not super sure yet, okay? Because when the market is ranging right there, I do not like range. I despise range personally. I like a momentum, but it's a range pair. You can see right there we had a range. Right here we are getting another one. It's a range pair. So I've got to sit down and watch how it plays out. But there is a very good potential for this trade. Pound CHF is another one that I'm shorting as well. It has not been the coolest. But so far, it looks that this might be a profitable trade as well. I'm still holding on to it. I'm watching it very closely, and I would like to see how it goes. Although Pound CHF is not among the recommended trade setup right here, but some times ago when I took the trade, I think last week, it should be last week, what is that? Last week Tuesday, that should be on the 17th of June, it was reading bearish on Let's find out. Right now it has disappeared, and I'm still holding on to the trade. Lastly, which is the trade I'm holding US 30. I'm buying US 30 right there. Okay. I actually took the trade around here when it touched 50% Fibonacci, high, low, 50% Fibonacci. The market opened on Sunday and I took the trade. And then last week, when the whole Trump said it's gonna, during the G7 meeting, Trump throwing some tweets around, it's gonna launch, it's gonna join Israel in the attack, blah 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 blah. The market kind of like came down. And on Friday, due to he said he's gonna. I think it was on Friday that Trump said he's gonna like give Iran 2 more weeks before he interferes into the affairs of what's going on in the Middle East. I guess that is why we're getting a very positive reading on the stock market right now. But overall, you're going to see how it goes. But when you take a look at the stock market in the United States, right, you see that it's still quite neutral, right? Based on what we discussed earlier, the stock market is still very much neutral in the United States. So US 30, Nasdaq, S&P 500, all of them got potentials, but we have to wait to see how they goes in the next couple of days, or weeks, or even a month. All right. So that is that on all the trades I have going on right now. Now let's start with the trade recommendation. And yes, this is the stock market I'm talking about. You can see right here we have S&P 500, 45%, almost neutral, right? UK 100, quite bearish. DAX, awfully strong. Kiwi, 88%, pretty strong. Aussie, 17% weak. I think this is CAD, this is New Zealand, and I think this should be China or Swiss. Yeah, Swiss 20. So that Swiss is quite strong, which is good. Aussie is awfully weak. That is like 17% right there. That's not good. And we have the Canadian dollar, the Canada stock market, which is 67% quite strong. And then we have the Kiwi, New Zealand dollar, neutral, also very good. All right. But the major thing we have to focus on is the S&P 500. It's awfully neutral right now, 45%. So give or take, we're gonna have to watch this and see how all this goes. So now back to my trade recommendation. What do I have for you today? Let's start with Euro Aussie. What do we have on Euro Aussie? Xfjpy is forecasting bullish, and I would say bullish is good enough. But how do you enter this trade? First off, let's wait and let's anticipate for a further drop, maybe a retest of this region. Then you can go long on it. Okay, you can go long, probably target this all-time high. Literally this previous high anyways. I'm not sure if that's all-time high. Okay, you can target this particular high and see how the market goes from there. All right, but I'm not going to be touching this one anyways. It doesn't look good enough for me. All right, So, but let me recommend another one for you, which is something I would love to trade myself, and that would be good. Let's take the chart to 4 hour time frame, and let me use my tool right there on the 4 hour time frame. So taking a look at the 4 hour time frame right now, you will see that we have a contrasting momentum in the price of in gold. All right, and there is three possibilities right there I've mapped out personally for myself. Once the market open next week, I would be willing. Let me take the chart to 2 hours time frame so you can see this very clearly. By next week, all right, first off, considering the fact that the market is still above the 200 period moving average, and we saw an almost oversold RSI print on gold right there on the 2 hour band. Now the plan is, if we can get the market to break above here, pull back nice and easy, I will long gold. That's number one. Okay, the first trade recommendation: look to buy gold. And on Edge Finder as well, you will see that we have what? We have a very bullish reading on gold with a score of 10. That is very, very good. Okay, so you might take a look at buying gold. However, you have to be careful, all right, because of this break and retest of structure. Break, retest of structure. We can see gold actually retracing back, all right, to this region before we now get it to bounce back up. So if that happens, I'm also going to short. Okay, but it's going to be a short sell. I won't sleep on it. I'll probably be trailing 40 pips, all right, on this one. So this might look very technical to you. So if you want to get an entry setup or an entry signal on all these trades, you can simply chat me up and I will give you the procedure on how to go about it, meaning how to join my group and how to execute all these trades. All right. So I have two trades set up. It's not something I do all the time, but it is right there. Xfjpy is forecasting a bullish reading on gold, which is very normal, and I anticipate for that. Okay, if we break above that region and we tested it, I'm definitely going to buy. However, if it happens to actually come all the way down here to some level right here, I will short. My stop loss is going to be at the top there, and I would like to see it actually drop further. Okay, that would be something that I would personally love to do on gold. We buy at the top here, and we sell maybe further down right there. Okay, and as it goes, I will update you on how it all plays out. Although generally I'm still very bullish on gold. As a matter of fact, if it comes all the way back down here at 3,300, I will definitely buy. All right. For now, I have an intraday set. Let's just call this an intraday, because this trade setup might play out on Monday, or maybe if you join on Monday, it might play out before the New York session on Tuesday. So it's still like a short-term or medium-term trade for me. That's my first trade recommendation. The second one would be, let's take a look at Xauusd. Let's take a look at Xauusd. Xauusd made a very rapid run this last week. All right. Although I couldn't join around here, definitely I couldn't join. But I see pound yen, Xauusd actually coming back to this region for a good retest. Then I will long it going forward. Okay. So if you can wait for something like that, it's awfully distant from 200 period moving average. So I'm just waiting for it to come back to retest the 200 period moving average before I now go on and buy Xauusd. It might take a while. This is going to be one of those long-term swing trade. Okay, so it might not be for everybody, but if you're interested, you can wait for the pullback. Okay, back to this region, and then go on and buy Xauusd. It's going to be a very sweet one moving forward, but just be careful. That's the second trade recommendation I'll be giving today. The third one should be on Bitcoin. Let's take a look at Bitcoin together. I think I've got some trades set up on Bitcoin. So far so good. We've seen Bitcoin actually make a massive dump in price. And now I've got to set up on it as well. Okay. The first 3, 4, 5. This is the fifth time we'll be getting a retest of the 100K region. Yeah, it is normal. All right. But what have we seen since the time that every time the market retested the 100K, we get a rebound, a rebound, a rebound, a rebound. Now, is it possible before Monday we might get a rebound from that 100K as well? Very, very possible. Is it going to happen? I'm not sure. But is it possible? Yes. Now, take a look at the RSI. RSI is leaning towards oversold already. That's crossed below 50 and is leaning towards oversold, which is very good. All right. Because right here as well, leaning towards what? Leaning towards oversold. Right here also, cross below 50. Okay. These two times cross below 50. So we might get a rebound all the way back to the upside if the demand is actually pretty high, the same way it was in the past. Now, our adventure, we didn't get that. There's high possibility that we might get it actually torpedoed down further, probably come to like 98 region, $98,000, pull back to retest this 100K region and use it as what? Use it as resistance. And then we can get a chance to sell it all the way down to 91, 90K. I don't care. I just want to see it plan out and play out very well so I can go ahead and pick the trade. Nice and easy. Okay, that is the plan. And when you take a look at the edge finder, we see that Bitcoin is actually nowhere to be found right here. It is blank. It is nowhere to be found. So that gives me a little bit of a window to speculate this way, all right, on Bitcoin. But I'm still very careful because on the daily band, Bitcoin is awfully bullish, all right? Nothing anybody can do about this. So we just have to be very careful. We have to be patient. But like I said, we can get a retest of the 200 period moving average, meaning you can see Bitcoin come down to this region before we now get a more bullish print or a more bullish momentum on Bitcoin moving forward. That is if it breaks below the 100K region. Pull back to retesting it and then drop further. All right. So be cautious, be careful with Bitcoin as you approach it this particular week. The last trade recommendation I'm going to be giving, that should be on WTI. Yes, the crude oil. So let's take a look at crude oil. Now, don't forget, we've seen a very, very interesting update in the conflict between Israel and Iran. Okay, it's a serious update. We've had USA said they're gonna go in the next 2 weeks. China and Turkey and Russia, they are all calling on US not to touch that issues. Okay, if they touch it, there's high possibility of those three countries also supporting their partner, which is Iran. Can Iran take care of themselves with Israel alone? Well, for the past 7 to 8 days, they've been doing an amazing job. Okay, moderately, they've been able to touch each other's region. Okay, with some very strategic ballistic missile. Now, has oil been extremely predisposed to all this conflict? I think oil has been able to take care of itself since the first launch or the preemptive attack that happened last week Saturday. Okay, so far so good. Everything still looks very cool. The market is taking the conflict like a champ, but for how long? All right. If US, I'm talking about Trump, finally gave the go ahead and then they started dropping serious bombardment on Iran and China, Russia, Turkey, I think Oman also, if they end up joining Iran, and then we've already had France and Germany and UK strategically refueling, Russia, Israel, playing fighter jets and every other thing like that. Okay, but they are still on the ground. But the main player here is the United States. The moment the United States join this war, supporting Israel, then it's gonna be massive very fast, and that is why you want to plan. Right now, there is no picture of shorting US oil for me. It is to buy, because if this thing gets super escalated, oil will fly, like literally get expensive for the United States. All right, and if that happens, people are forecasting, probably sentimentally, that US market will crash, whatever. I'm not sure about that. I just want to trade US oil. So if that happens, peradventure we're gonna get a pullback. Okay, if I get that pullback, you can look for that buy opportunity, even if US doesn't join the war. Okay, but if they do, then you can be sure that this buy opportunity, just don't use take profit, because you will see oil probably fight to 120 or maybe 200. I can't really tell right now, but there is high potential for WTI. Just even without the geopolitical tension and every other thing, that we're seeing right now, or there's unraveling right in front of us, I think there's high possibility of us getting this normal pullback. I mean, if you're focusing on just the chart, this pullback to this region, or maybe a much deeper pullback to this region, and then we see a nice and decent push in the price of WTI. So whether you want to go in the side of geopolitics or you want to stick to what you actually understand, what is the chart analysis, pure price action, and whatever, all right, the plan is still to look into buying WTI. Now, the caveat here is once I see this actually come down here, and that would probably happen when we get this pullback. If we get the first pullback, which is this one, okay, we might likely get the RSI on 4-hour time frame actually slightly cross below 50 before torpedoing back to the upside. But if we get this second one, which is the much deeper pullback, okay, to 61.8% Fibonacci, then we might likely get a much deeper drop on RSI as well before the market now torpedoes back to the upside. So those are my three recommendations. The first one was the first one on XAU, which is good. Then we have BTC. Then we talk about what WTI. I think I only talked about I only talked about the some commodities today. They are not currencies. I think we also talked about Swiss yen, Chfjpy, right? Yeah, I think we talked about Chfjpy. That was the only forex pair that I kind of recommended. All right, there's so many I could have recommended. All right, but the time wouldn't permit me. So if you want access to all my trade recommendations, trade setup, signal, whatever, just slide to my DM, ask for questions, ask anything you want, and let's have a conversation. I will see you in the next one. Do have a fabulous day. Please don't get matching code. And don't forget to subscribe to my YouTube channel. Don't forget to follow me on all my socials. I'm on IG, I'm on TikTok, I'm on LinkedIn. Those are where this video are going. So I will see you in the next one. Have a fabulous day.